Today, we're going to take a closer look at a popular fintech company, PayPal, ticker PYPL. Yesterday, the company did announce some pretty cool updates that I believe investors should know. And I do believe this makes PayPal even more attractive than it was before. Let's take a closer look in today's episode. So, first, let's start off by taking a closer look at PayPal, currently sitting at $67 and is down roughly 1.8% as I am recording. Year to date, the stock has not performed that well. The fintech market continues to kind of get hit. Obviously, with macroeconomics and a lot of companies like PayPal, right, they do depend a lot on transactions. And if we might be seeing a slowdown in certain countries, if we're not seeing the spending we used to see, then obviously PayPal is going to get hit one way or another. I do believe this is more short-term pain. In the long term of things, PayPal will continue to do well. And once kind of consumer goods and consumer spending continues to increase again, I do believe PayPal will kind of see that growth as well. When will that happen? That's a very interesting. I won't be able to tell you that, but I do believe that it's going to happen the same time we start to see an uptick in the advertisement market, because obviously advertisers are going to see that, hey, we're seeing a nice growth in consumer spending, so we're able to start advertising again, and overall we're going to start to see maybe more transactions happen over time, which can obviously benefit PayPal. We can see PayPal, right? This is a very popular and unpopular stock, right? I think investors or investors in general, not investors of PayPal, but investors in general are completely in opposite directions. Those that are in PayPal are completely bullish. Those who are not in PayPal are completely bearish. And we can see overall from this company's 5-year high, the stock is down roughly 78% still. Like I mentioned, market cap of $75.4 billion. So what I want to take a closer look at is yesterday on June 20th, PayPal and KKR announced an exclusive multi-year relations for European pay later receivables. So KKR is going to purchase up to 40 billion euros of eligible current and future PayPal pay later loans originated in Europe. And PayPal is expected to allocate approximately $1 billion to incremental share repurchase this year. And they updated their outlook from approximately $4 billion of share buyback to approximately $5 billion in total share repurchase in 2023. I think that's insane, right? $5 billion in total repurchase. Remember, this company has a market cap of roughly $7.5 billion. So purchasing $5 billion at this market cap, that's kind of eliminating roughly 5%, over 5% of the market share of total shares, right? So I think that's pretty interesting. But now let's take a closer look at this kind of partnership, and I think this is actually pretty interesting for PayPal and can definitely benefit them a lot more than investors are giving credit, right? Because if you are a consumer and you're going to PayPal and you're purchasing something and using the PayPal Pay Later loan system, you're doing a few things. First, most likely PayPal is going to get some form of fee or from originating or making that sale using the PayPal Pay Later loan system, right? So they're already getting a fee from there. Then what's most likely happening is, because it is a loan, they're most likely getting some form of interest from that loan as well, right? So PayPal is winning, is getting money in two sides of things, right? The fees and maybe the interest. But what ends up happening when something like this is, obviously you have to then have a nice wallet amount to be able to kind of fund all these loans. So what's going to happen is, in Europe, for example, KKR is going to buy certain eligible PayPal Pay Later, say that 5 times, it's insane, PayPal Pay Later loans, and this is going to eliminate some form of strength needed in the balance sheet, which is pretty interesting. PayPal most likely will still be making money from the origination fee, but KKR will most likely be making the interest loan money, right? So obviously we don't know the exact numbers of who's going to get what, but I do believe this is obviously going to be a win for both KKR and also PayPal, right? So if we take a closer look at this press release, they mentioned that KKR, a leading global investment firm, today announced that it is signing an exclusive multi-year agreement for a 3 billion replenishing loan commitment under which private credit funds and accounts managed by KKR will purchase up to 40 billion euros of buy now pay later loan receivables originated by PayPal in France, Germany, Italy, Spain, and the United Kingdom. Under the terms of the agreement, KKR's private credit funds and accounts would acquire substantially all the European buy now pay later loan portfolio held on PayPal's balance sheet at the close of the transaction, and will also acquire future originations of eligible buy now pay later loans. PayPal will remain responsible for all customer facing activities, including underwriting and servicing associated with the European buy now pay later products. So, right, we can see that this is a great partnership. PayPal is still going to be the forefront of it. They're still going to be handling a lot of the customer facing activities, which I think is great news because I do believe that they're still going to be able to originate maybe some form of fee and make some money out of there. And then they're going to kind of give out that responsibility to KKR, and they're going to handle the rest. They're obviously going to get the bulk of the money, most likely all the money from any interest loans, because they are taking that form of risk. But before we go any further, guys, if you are enjoying the episode, make sure to hit the thumbs up. Make sure to hit the subscribe button. I'm trying to hit 30,000 by the end of the year, and I really, really need your help. Finally, if you want to learn more about the semiconductor market, make sure to check out my membership. Just hit join. We have a community on Twitter where you can join and we can discuss. We have weekly videos. And finally,
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
and unfortunately, PayPal doesn't break down, or I didn't see it in their 10Q report. They don't break down their consumer loans and interest receivables by kind of countries or anything like that, but they do break it down just in general and what loans are current and maybe what loans are delinquent. And I do believe this is why KKR kind of chose PayPal, because out of all the loans, it does seem like roughly 97% of the loans are current for PayPal. So it seems to be a very, very minimal risk for KKR. Who knows? Maybe in Europe, this number is actually even stronger. It is even stronger and could be a little bit higher. And we do see that again in as of March 31st of 2023, consumer loans and interest receivables is roughly $6.1 billion. So obviously, I don't know. We don't know the true breakdown right now. Maybe we might see some later on. But again, this is going to free up PayPal in a nice amount in their balance sheet. And I think that's super, super impressive. And I really do enjoy this move. Let's take a closer look here. They do mention that their collaboration with KKR will allow them to accelerate their PayPal pay later originations. So now they can even originate a little bit more loans in due to the demand that they're seeing in Europe, while preserving free cash flow for other strategic initiatives. The transaction is yet another example of their disciplined approach to capital allocation. So we can see how PayPal is definitely winning. Now they're going to be able to originate more loans, maybe get more fees out of there, and at the same time be able to preserve that free cash flow, which they can use for other strategic initiatives like increase their buyback program. They do mention that this transaction is expected to close in the second half of 2023. Upon closing, PayPal is expected this transaction to initially generate approximately $1.8 billion of proceeds to be used for a combination of increased capital return to shareholders and general corporate purposes. The transaction is already contemplated in PayPal's full year 2023 guidance for GAAP and non-GAAP earnings per share and non-GAAP operating margins announced May 8th of 2023. That, I think, was one of the only parts that really scared me, right? The deal hadn't gone through and PayPal was already adding it to their kind of guidance. To me, that's something, I don't know if I would call it sketchy, but it's kind of misleading to some example, because what happens if this deal wouldn't have gone through, then PayPal would have had to revise their guidance on the lower end, and it would have kind of scared investors a lot. So that's one thing I want to say. I'm not too excited, right? Overall, I'm excited about the deal, but the way management handled it might be something something I'm not too excited about. PayPal does expect to allocate approximately $1 billion to incremental share repurchase in 2023, contributing to an updated outlook of approximately $5 billion in total share repurchase later this year. Like I mentioned, PayPal with a market cap of roughly $75 billion, $5 billion is going to be over 5%, maybe closer to 7% of total shares outstanding. So I think that is insane. Another thing, I just wanted to take a closer look at PayPal and their most recent earnings. We can see capital allocation. The company 2023 year to date already repurchased $1.4 billion worth of shares. So we can expect another 3.6 throughout the year. Especially with the stock price at these low levels, I would be shocked if this company doesn't buy back another 1 billion this quarter again. Some other things I just want to mention is PayPal continues to expand its kind of payment solutions, which again, this is a company that depends a lot in transactions. And the more they partner up with others, the greater that growth can happen. Here we can kind of see with Microsoft, they're also expanding their driving PayPal unbranded solution with PayPal Braintree and with PayPal Complete Payments. Again, in my opinion, continue reasons to be bullish in this stock. We can see transactions over a year ago grew 13%. Total payment volume also grew about 10%. Obviously, if you look in the quarterly basis, things are down, I believe. But remember, last quarter four of 2022 is the holiday season. So that's usually the peak in forms of transactions, in forms of total payment volumes, in forms of kind of maybe active accounts as well. So I'm not too worried that quarter one is a small sequential decline from quarter four, just because of the way, kind of like I mentioned, holiday seasons. I am happy that there is a nice growth on a year-over-year basis. We can see company is free cash flow positive. They do expect again to continue to see an increased growth in repurchase and to have roughly $5 billion of free cash flow this year. They also did raise their non-GAAP earnings per share guidance. So overall, I am happy with PayPal. I am an investor, and I personally do believe this is one of those stocks that I don't mind adding on to. I personally wouldn't make this a big account, but maybe a 5%, 4%, 3%, somewhere around there, right, in my portfolio. I think PayPal can definitely have the opportunity to be a big winner. Obviously, there's competition in this space, so risk is always there. The final thing I wanted to take a closer look at is an update that happened about a month ago. On May 2022, PayPal introduced the Venmo teen account. So if you are a teen and you are a parent, you can open up a teen account for your child. I think this is great news, right? Because I mean, personally, my mom, when I was 16, opened up a bank account, and I'm 31. Am I 31 now? 30, 31. I forget my age right now. But since I opened up that account, I haven't changed banks, right? So I think sometimes banking, if it's easy, if it's non-intrusive, if it's nothing crazy, then it's a very sticky business. So if teens are getting their accounts opened by their parents, when they're 18, when they're 19, when they're 20, they're going to continue to use Venmo. They're going to continue to use PayPal. It may be some more of their banking solutions. So I see this as a bullish trend as well. So those are my thoughts on PayPal and their KKR partnership. I think that's great news. I think this is going to help out the company continue to buy back shares and overall make PayPal a continued monster of where this is definitely one of those stocks that if they do well, it's going to do a lot for shareholders. And if not, then the bears are going to continue and be like, see, I told you, this is a dying company. I think like I mentioned, I'm leaning more to the bullish side. So those are my thoughts. I hope you guys enjoyed today's episode. Take care. Have a good day and see you next time.